Good day. We're very pleased to host Wallbridge Mining this morning. It has a long and venerable history and over 5 million ounces of gold to find. Brian Penny, the CEO and director, will be the principal speaker. We have Attila Pentek, the VP Exploration, and Francois Chabot, the technical studies manager, to complete the brand trust and respond to any questions that we may have. Please begin, Brian.
Thank you, John, and thanks for allowing us to participate. And I will go right into the presentation from here. As per the norm, we have certain forward-looking statements. We encourage you to read them at your leisure. There are a lot of estimates that go into this presentation and the studies that supported it. But our investment thesis is simple. We're in the northern Abitibi. This area wasn't discovered by the old timers because there's 20 to 50 meters of overburden, very little outcrops, but we're on strike with the Detour Lake mine. We have two discoverers being Martinier and Fenelon. Fenelon is the bigger of the two. They're about 30 kilometers apart, and Fenelon is about 70 kilometers away from the town of Matagami. When I discussed, I mentioned the overburden, whereas, the southern Abitibi between Rouen and Val-d'Or, there was very little glacial overburden, surface outcrop, and that area was discovered 100 plus years ago during the exploration at that point in time. We believe we have a deep district scale discovery here. As you can see, we have 837 square kilometers. It's 97 kilometers of strike length on the Detour Fenelon system, as we call it. You can see on the interior side of the border where the Detour Lake mine is, which I believe is Canada's largest gold mine at present. And you can see our two discoveries and our land position. On the map, you see some power lines right beside the I-810, and that's where the main power system coming from the James Bay hydroelectric system passes our property. So we have access to green power, and we would look to energize that as the project goes to the actual construction phase. A little bit of a timeline of the discovery. Wallbridge was primarily a nickel explorer in the Sedley Basin. In late 2016, they acquired a postage stamp property of 10.5 square kilometers called Fenelon from a company called Balmoral, which we later acquired the whole company. We did a bulk sample in 2018 on the resources at that point in time. It was, the Gabbro zone. It was very successful. We had 96% recovery, much higher grade than what our resources are now. But unfortunately, that deposit was limited to, this Gabbro zone. And so continuing exploration in 2019, the discovery hole was Area 51 Vasco Cadian zone. It's the reason why it's called Area 51. It was our 50 that we drilled at the ore body. And that's where we started on our current path to success. In May 2020, we acquired Balmoral Resources, which is most of the property position we have now. It was through a shared deal, and at that point in time, the only resource that they had was about 600,000 indicated ounces of gold or Martinier. In 2021, we published our first resource estimate. At the time, we thought the best way to advance this project is through a large open pit, and we updated Martinier at the same time. In 2022, to simplify the company, we divested our nickel assets to a company called Archer Resources. We declared a dividend in specie to our shareholders, which is a tax-free distribution for Canadian shareholders. And we also kept a 2% royalty on the said property so we can share in some of the upside going forward. In January of 2023, we provided a new updated resource for Fenelon and Martinier. And Fenelon, we focused more on the underground bulk mineable scenario, because we'll see later on in the presentation when we talk about ounces per vertical meter. Why we made the shift, but it was the right thing to do. And you can see the indicated inferred resources there. So, we've got quite the discovery here. Mid-year this year, we did a preliminary economic assessment on the property. It was based on a 7,000 ton per day operation. And you can see the economics there. It's about a 12-year mine life, and upfront capex to startup is about $645 million Canadian. We're always focused on ESG. We sourced our material supplies consultants from the Abitibi region as much as possible. We published an ESG report in 2022. We will publish another one in for mid-year 2024. And from the numbers, we spent about $50 million in 2022. So half of it was sourced regionally. And then we committed $1.5 million to road improvements in the area. And that was also funded by the Quebec government for a much bigger number. We have about 25 to 30% of our workforce hired from Indigenous communities. We signed a PDA with the Cree communities, which we have a great partnership with them. And, we in December, earlier this month, we achieved 5 years with a lost time accident. So safety is in our DNA. We do have a supportive shareholder base. You can see the share structure as of November 2nd. Nothing has changed since then. William Day Construction, which was our contracting firm out of Sudbury, owns about 6%. Eric owns 16%. Agnico Eagle, through their investment and acquisition of Kirkland Lake, owns 9.9%. And Agnico has participated in the various financings we've done to maintain that ownership interest. And we have 4 analysts covering us. The most recent one was Jacques Wortman at Laurentian Bank. So getting back to the map, sort of an introduction of where we go, just to remind everybody of what our property position looks like. This is our resource estimate that was completed in January. You can see that, about 60% is in the indicated category. There are some small startup pits that could be mined, depending on sequencing as we go forward. But the bulk of the resource is in an underground bulk mineable scenario. As far as the update at the middle resource estimates, you can see the purple here of where we envision mining activities to happen. It's all, above 1,000 meters. And this all fits into a cube about 1 kilometer cube. So it's nice and tight, immutable to bulk mining. And then you can see on the bottom below the 1250 meter level, you can see that we do have a hole there that indicates that this extends at depth. I mentioned earlier about ounces per vertical meter, and that's key in bulk mineable. As you can see, at the upper levels, it's very low. And if we would have started with an underground scenario, the first year challenging. So as we got into it, as we understood the resource more, it made a whole bunch of sense to look at a bulk mineable scenario. And we have some comparisons on the bottom and in a future slide that we talk about why we think it's good. PEA highlights annual production of about 212,000 ounces, free cash flow of averaging 157 million a year, initial capex quite comfortable at 645 million Canadian. These are all Canadian dollars. The initial capex, we will start off. There is a rent remaining from the bulk sample operation in 2018 and 2019. We will dewater that. We will extend it, and we will mine the upper levels of the ore body with rib access, which will allow us to have a quicker startup, and then we will sink the shaft as part of sustaining capital expenditures. That's why the sustaining capital expenditures are almost the initial capital. that will allow us to advance this project on the best way for our shareholders. Our PE approach was simple. We went back to first principles. There's very little infrastructure there, so we were basically starting with a clean slate. We went through and got third-party consultants to help us with rock mechanics, stope productivity. We got quotes for a mining contractor for the early years to extend the ramp. So those are all fresh costs. There were certain trade-off studies completed, and we, as I mentioned earlier, we're looking at building this on a phased approach. And all of the costs were assembled based on, the fourth quarter 2022 costs. So we went out for tender on a lot of things, and that's what's in this. We just didn't say, so-and-so built a 7,000 ton a day mill 2 years ago, and we index it by inflation. And, that's not real rules. We actually went to the component parts and built the costs up from there. This slide talks about the project phases, 2 years construction. As I mentioned, we start off with ramp construction at 7,000 tons at A1 to 4, and then by a shaft in years 5 to 12. And then as we go on, increasing tailings sites, etc. Here's our PEA with an averaging 212,000 ounces of gold a year. You can see the grade's pretty consistent, and the annual production is pretty consistent, which is great for a public company. Too much volatility is not great, but we're happy with the way that the first test worked out. After cash tax flow, you can see the bar chart there. Obviously, in the first 4 years was lower as we build the underground infrastructure being the shaft, and then after that, it's relatively processing. Looking at the PEA, you can see that the upfront capex is $645 million. Most of it is associated with the mill and the surface infrastructure. As I said, we're going to mine using a mining contractor, so very little equipment purchases. When we get in the sustaining section, we're building the shaft and buying equipment and the continued underground development. Looking at the total cash cost to the life of mine cost that's included in the PEA, total cash cost is $749, including a 4% NSR royalty on Fenelon. The Fenelon property, the 4% royalty is on the historic 10.5 square kilometer postage stamp that we acquired initially, and the rest of the properties has royalties of 1 to 1.5%. So if we blow this property outside of where we are today, it could attract lower royalties going forward. Our PEA sensitivity analysis, we use 1750 gold. You can see the numbers in payback at 1950s, which was spot at the time we put this presentation together. And today it's not far from there. You can see how the economic side of this adventure improves. And then there are some sensitivities to changes in operating costs and capital costs as well. Fenelon PEA comparables. We're in the Abitibi. There's a few other bulk mineable operations. Goldex, which is a little different than Fenelon. The closest proxy would be Young-Davidson. So we went through, we built our analysis from a zero-based approach, and we came up some numbers. Then we said, okay, let's look at this to our closest comp, Young-Davidson, for example. And how do we compare? Our grade, although it's a PEA grade and not based on indicated and inferred resources and not reserves, it seems to be a little bit higher. So we looked at Young-Davidson's performance compared to what we think, and we said, yes, it makes sense. As far as annual production, they're at 8,000 ton a day mill. We're at 7,000 ton a day with the, assuming the higher grade operations once we get to reserves, it checked to that. As far as the cost, the all-in sustaining cost, we did the same sort of analysis, and it provided us comfort that the approach we took to building the PEA was reasonable. Looking deeper into the PEA, you can see that, at this mine site itself, there is very little infrastructure. We have some office trailers, a core shack, and a maintenance shop. But other than that, everything would be new, and it's laid out in the top right-hand corner. As far as the camp's concerned, you can see that the camp structure, the blue trailers that are already in place. So we need to expand it. We believe that during construction and operations, there will be 600 people cycling in and out, so about 300 people at this site at any point in time. And our current camp can handle a little bit better than 100 people. So, it's part of the CapEx is to expand the camp. As far as the metallurgy, if there are any detailed questions, Francois can answer those. But gravity gold recoveries are very strong for Tabasco and Cayenne, about 60%, for 851, about 84%. Overall gold recovery is 96%. So very exciting. Nothing too stressful in that. And a simple gravity, we will produce the at the site and ship it to finally for final processing. And all in all, if we compare this back to our bulk sample that we did in 18 and 19 on the Gabo, the overall recovery now is 96%. So everything checks back and seems reasonable. First Nations, I had a call with people gone this morning, but we have regular meetings at least once a month, sometimes twice a month. We have a pre-development agreement with the Cree communities. And at any point in time, about 25% of the workforce is hired from First Nations. And, they're in the conversations. They're very helpful in a lot of things. And to date, they've been very supportive of us, and we've been very supportive of the First Nations communities. So next steps for the PEA opportunities, infill drilling will help give us, hopefully increase the resource grade, but to give us more confidence in the resource gain as we upgrade it to ultimately reserves once we do the feasibility study. Where there's still lots of room to explore at Fenelon. There's some additional studies we need to do to hopefully improve the economics. And, as far as Martiniere is concerned, it's not in the current PEA. The PEA is just on Fenelon. So this year we drilled about 23,000 meters at Martiniere. We will incorporate that into our modeling and look at next steps on how do we get Martiniere advanced so that we can put together a combined PEA at the appropriate future date that combines the two properties, because there are definite synergies and they're only about 30 kilometers away. And, with the property position we have, we believe there's a strong possibility of additional resources being added with exploring outside the current block. Again, talking a little bit about Martiniere, you can see the outline of the property. It's very low, a very low depth. All of the discovery is about 500 meters. It's open in all directions and at depth. And our key is to, some of that was drilled this year. We're waiting for assays, and next year to further expand on it to see if we can improve the overall economics by combining the two together. Our current outlook, well, this is pretty much done and dusted. The year is almost over. We will get our forecasted expenditures, and we will complete a little less than 50,000 meters of drilling. And again, it's to get that information into the models to figure out our next steps for 2024. In 2023, Attila, why don't you talk about this slide if you don't mind?
Sure. Apologies. I interrupted there for a second, but there was a very strong echo, so I just wanted to highlight that. But it's over now. So, yeah, sure. So the 2023 program was while we were waiting for the Fenelon economics to be revealed by the PEA and tell us really what the next steps are at Fenelon, this really gave us the opportunity to look at the rest of the land package. As you know, when we acquired it from Balmoral in 2020, since then, we had very limited chance to actually work on the regional land package. So we devoted half of the drill program to Martiniere because we felt that was, the second largest gold asset we have, and trying to push that towards development and getting it up to the same level of advancement as Fenelon. There's still lots of work to do, but Martiniere is definitely starting to get to that point where it's a very, very meaningful deposit, hopefully put into an updated economic study in the future and improve the economics of Fenelon. So we focused quite a bit on Martiniere, and then the rest of the program was spent on other properties. You can see some of these yellow boxes there. Those were the areas we focused on. So still at Fenelon and Martiniere doing some of the bigger step outs. So going 2 kilometers this way, 3 kilometers that way, testing the same kind of structures, same host rocks, trying to look for satellite zones. But then also going to some totally new areas which are grassroots and have really not been looked at before. There's a box in the middle there beside where the text says Harry. That's our Casso East Block property. So we did quite a bit of field work there and some sonic drilling for till, which is a new grassroots exploration method, trying to develop drill targets for the future. And then on the right-hand side, you can see Grisette is a property. There's about 20 kilometer strike length of the Sunday Deformation Zone that's virtually untested in the past. So we're quite excited about that property. And finally, this year, we got the opportunity to test some of our conceptual targets and do a first drill program. So those were, I guess, the main programs throughout the year.
Thank you, Attila. So again, our investment thesis is we're looking at a hub system to unlock the district scale opportunity. We believe that the first economic study is quite exciting, and we're looking to improve that through, further exploration, further studies to improve, whether it's, our operating costs, our capital expenditures, etc. We continue to de-risk, and we think that the system goes at depth as indicated by a few deep holes. We're in a great location. Transportation system is very good. Energy infrastructure is nearby. The Quebec provincial refundable tax regime is special because over the 8 years or so that we've been involved in Fenelon, I've been with the company for 5 years now. We've managed to receive about $55 million in refundable tax credits, which allows us to invest in the property and continue to advance the project. Last year alone, we received $13.5 million based on the 2022 exploration year. And for this year, we expect to collect $8 million sometime next year. We believe we can build a low carbon footprint because of the access to clean energy going forward. So with that, John, I will turn it back to you.
Thank you. We have many questions. One question is, when will be the next economic study, and will it be a PEA or a pre-feas?
Well, normally, once you do a PEA, you go to a pre-feas. But with the status of the equity markets, to achieve that would have been very diluted for our shareholders. So we raised $10 million of flow-through in October. We are doing a program with the goal of catching up Martiniere to Fenelon. And then our next study, more likely than not, will be a combined PEA, probably in late 2025 or early 2026. Depends how the exploration results happen during that period and if we can catch Martiniere up. because I think there's a great opportunity to improve the economics there.
There's a question about the impact of a carbon tax on your company. I'm not sure if the questioner understands the benefits you'd have from hydro or is trying to give you an introduction to explain the benefit, how your comparative advantage might play out if there was a carbon tax.
Well, right now, we don't know where this carbon tax is going to land. As we are as an exploration company, we are not impacted by it. It doesn't move the needle. And then to minimize it in the future, we need to, access the hydroelectric power as much as humanly possible to minimize that impact on our costs going forward.
So when you have your feasibility study, do you plan to have electric trucks and shovels?
That's yet to be determined, but I think we need to push for that.
One questioner asks about the decline in the stock price as gold prices have risen. You already alluded to not moving as quickly to pre-fees because you don't want to spend those monies raised in the current equity market. Do you think the better way to cope with the low stock price is to go slower? Do you think that that's a trigger to sell the company and let a major do the work that's better financed? Or do you just want to tread water for a little while and go slow and hope for better equity markets?
It's more of the latter. We're still advancing the project. We still have a plan to about half of the exploration budget as last year for 2023 this year or next year. So we're still moving forward, but at a slower pace to wait for better markets to get more aggressive on how we develop these properties.
I try to encourage some of my friends, Brian, to be patient and not do anything to make it worse. I had a friend that did a press release shutting off all 6 of his rigs, and then his stock went down more. Then he did a reverse split, and his stock went down more. Then he laid some people off, and the stock went down more. Sometimes it's really good to not make it worse and just be patient.
Well, that's our goal, is to be patient, but still keep advancing at a much slower rate and wait for better times.
Once again, everyone is welcome to submit questions through the question box, and I'll start working through that. Any thoughts on the deep discount to net present value, even compared with other projects?
It's a topic of discussion all the time. There is a lack of institutional investing in the junior section, the sector that does make it problematic for juniors like ourselves. Are we much different from everybody else? I don't think so. And we just need to continue to advance the project, state our goals clearly, and achieve them. And avoid changing where we go depending on the latest thoughts in the marketplace. We need to have a steady hand. We need to go forward and continue to advance the project, ultimately with the goal of building something. But for all intents and purposes, at some point in time, somebody else may make the decision to build it for us.
Do you think the optimal time to vend or JV the company would be after a definitive fees, after pre-fees. The province of Quebec has many rules, and some of them are very good. They like to see a definitive fees prior to filing permitting. Some big companies like everything gift wrapped and permitted. How do you think you're going to manage those considerations?
Well, you can start the permitting process before, you can file your project description, start the consulting process before your a pre-fees is filed. So, that's probably your approach will take because it'll allow us to de-risk things. The big majors would like everything to be totally de-risked. And, it all depends on where metal prices are and the investment climate at that point in time. But, we steady as she goes, continue to focus on advancing the project. The goal is ultimately to get it to a pre-fees or a fees at some point in the future. And for now, we just need to continue to de-risk the process.
Why do you think you don't get a better premium for your position with 5 million ounces in Canada and Quebec, given the good political value?
I ask that question a lot of times. And, I think part of it is in the past, we started off chasing an open pit opportunity, and that didn't work out. And we landed where we needed to land on an underground bulk mine scenario. And we need to continue to communicate our goals and deliver on it to help restore credibility, and ultimately that should impact our stock price.
What is the joint venture agreement with Agnico for Detour East?
Attila, you're better equipped to answer that. It's an earning agreement, John, and Attila can give you the details.
Not sure Attila has the details off the top of his head, but yeah, it's an earning agreement. It's an option agreement where they can Nico can earn into Detour East. It made a lot of sense at the time. Obviously, with the large land package, we can go everywhere and do it all ourselves. Agnico being operating right at the board, it made a lot of sense for them to take that on. Well, it's a very grassroots project. There are a couple existing showings on the property, but other than that, it's a huge property that's very underexplored. So Agnico has been beating their spends. All the indications are that want to continue earning into the property. They've done some grassroots exploration, doing some geophysics, field work, a little bit of drilling. None of that was didn't reach the materiality level where we would have to disclose or really talk about it. There wasn't any discovery made so far, but like I said, it's very early days. It's very early grassroots type exploration. As far as we understand, next year they're going to continue and actually might a bigger program on it, but it's too early to say right now. So if we are in constant discussions with them, and we receive the results of the, so as soon as we see that there's something we would like to share with the shareholders, will be that. Then that in the end, we talk about the updates.
What is the minimum diluted interest Wallbridge would have? Is it a specific NSR or carried interest?
And would have to go back to the agreement. I believe
I think it's a 35% interest. It's disclosed in our AIF. And then ultimately, over the years, if we get down that there's it can be converted to an NSR. But the details, John, I don't have with me. but it is included in our AIF that was filed in March of last year.
We have lots of good interest on the webcast. Someone's asking if we're actively recruiting a CEO. I guess that's like asking if, Brian, are you permanently in place?
Yeah, I can answer that question. Is one thing that our board is focused on is good governance, and a process was started for a search for a CEO. I believe I will be the successful candidate, but the board has to do what the board has to do, and we'll find out the results of that sometime next year.
Someone asked for you to review the management and directors' stock holdings in Wallbridge.
I do not have that information with me. So unfortunately, I can't comment on it.
Is there an advantage to concentrating the drilling one or two areas of the land package? I guess the questioner would like there to be more evaluation of the broader, almost 1,000 square kilometers.
Yeah, maybe Brian, I'll take that one. So I mean, as you know, after this discovery at Fettelon, for several years, we focused all of our drilling to Fettelon to complete all the drilling that have to be leaned for the resource estimates, PA. So, really had to focus on that to make sure the resource was robust. We have everything needed to support the economic study. Like I mentioned earlier, this year was really the first year where we were able to go out. I admitted some drilling at Martiniere last year already, but this year we could set the geology team loose and on the land package and look further. We developed the targets over the years already, but this year we were able to start testing some of those. It's always a strategic discussion where to put the limited meters we have or the resources that we have, and it's there's more that's Fettelon could be expanded even more. Martiniere could be grown, and there's definitely new discoveries to be made on the land package. So we always have to sort of evaluate the current market at this stage of the company. What's the most value creative, and for this year, like I said, that was the decision, is to devote half to Martiniere and half to various exploration.
There's a question about the $42 a ton underground mining costs. And I guess there's also a question about the mining method and ease of execution, etc. Could you talk a little bit about the choice of mining method for 7,000 ton a day and bulk mining versus selective mining, etc.?
Press one. Can you help us with that one, please?
Yeah. So we go to raw gold mining. The deposit, the depth of the deposit and the rock mechanic is suitable for raw gold mining. So it's allows us to have a large stope, 40 meter high on Tabasco and 30 meter high in Area 51. So we have about 15,000 ton size stope. So that's a good style stope, and it's allows us to have lower mining costs, and our mining costs are comparable to Young or Goldex, as we are using the same mining method and same type of approach, mechanized larger open block gold stoping.
And that's Canadian $42 a ton, right?
Yeah. Yes.
What is the name of the bulk method you're going to use?
It's raw gold retreat, and we have also transverse raw gold where the deposit is larger than 8 meters.
Did you say vertical retreat?
It's a longitudinal retreat and transverse stoping. It's all long. It's just the way that we take out the material. Longitudinal, we're retreating at and longitudinal stope, and transverse, we have a drop one perpendicular to the portion.
It's very good that the majority of the gold reports to gravity. However, sometimes when there's a lot of native gold in a deposit, the drill results are influenced by high-grade assays or results. Could you review your top cut procedure and how much of the gold is erased by the top cut?
That's all.
I think it would take probably the whole 45-minute session to review all the top cut procedures. They're well documented in the technical report. We have it's zoned by zone. So, I mean, Fenelon has about 120 zones. Martiniere has about 100 zones, and the top cut values are evaluated for each zone separately. It's a very careful, statistical work. There's various methods to do that. There's about 4 different methods how you can derive the top value, and Innova Explorer consultants have used all of those and decide on the top cut. The range is quite big, so some of the low grade zones, the top cut might be 10, 15 gram per ton or even less. Some of the Gabbro zones, for example, where we have really high grade bonanza type mineralization, and we have already done a bulk sample, so we have really good understanding of those. In those areas, the top cut could be about 100 gram per ton. So, there's a big range depending on the mineralization style. And also, of course, it depends on the drilling density as well. So in areas that you don't understand that well yet, try to be conservative and, use the lower top cut value. Whereas, like I said, in the Gabbro zones, we already have a really good understanding. In those areas, you're a bit more aggressive and you can use higher values. It's very common in these mining operations that they keep adjusting the top cut value, and actually it keeps going up as they get more confidence with the mineralization. So in terms of how much percentage is being lost, again, there's a huge range in that, but I would say, often the 10-20% range. Again, it changes from zone to zone. There's quite a bit of details of that in the technical report. So
as you say, there's 100 domains?
Yes, about 100 zones, subzones that are all modeled in 3D.
So for 4 million ounces, with 100 zones, each zone would average 40,000 ounces?
No, that's a bit of a, the way it works is about, over 50 or 60% of the ounces are actually in a handful of zones at Fenelon. There's a few that are really dominant, like the contact zone, the Damasco zones. But, the more we understand the mineralization, the more you create these little subzones, smaller domains. So that's kind of how it lands up.
So a decade ago, it was more common for technical studies to have 1 to 5 domains. And I'm playing devil's advocate mathematically, Attila. When you have 1, 10, 25, 50, 100 domains, it can be kind of a mathematical bullshit to reduce the reported variation by making every domain unique rather than averaging them together where it could be more variable.
So that's what
how unique is the geological basis for each unique domain?
They are being grouped together when the geostatistics is being run they look at certain areas where, okay, these 10 zones have the same characteristics, so these 5 zones have the same characteristics. So that way the statistical representation is high. So that way you can do geostatistics and you can evaluate the top cut and various other parameters.
How many of the domains have assays over 100 grams?
Oh, how many of the domains? Yeah, it's hard to tell. The development happened.
3-gram deposit roughly.
Yeah.
So how much of it is
Well, there's
by 3 outside?
there are a couple zones in the Tabasco area that have those canoe assays. There's a nice heavyweight shoot that where we consistently beats about 100 on ad 6. So I would say 2 or 3 there. The Gavro zones have always been traditionally known to have those division states. So there's about 5, 6 zones there. And again, in Area 51, we have certain zones that have characteristics. So I would say about 10, 15 zones that have that.
Brian, can you go back to the 4% of the royalties? Who are they with?
Yeah, on the Fenelon primary, which is where all the resources are today, there is 2% to gold royalties, 1% to Eric Sprott, and 1% to Franco. Those were all in place when we acquired the lands from Balmoral. And then outside of that, there is 1% to some of the claims to Franco, and then some of them have 0.5%. I can't remember the name of the party right now.
Thank you. There's some sarcastic questions about the drop in the stock price and how much of the management compensation is tied to the stock price or cash versus stock, and why the board is so large. I think people are unhappy because the stock price hasn't risen. Will you cut a few board members to cut costs? That was a question.
It's up to the board to make that decision, whether they want to reduce the size.
In terms of Eric Sprott's ownership, is he continued to participate in subsequent financings?
No, he hasn't participated in subsequent financings for 2 to 3 years. He sort of held his position and he's been diluted with every financing.
There's a question to Attila to expand a little bit on the potential of Martiniere.
Yeah, so when we acquired the project from Balmoral, it had about 600,000 ounces. Now we've already doubled it since then, so around 1.3 ounces. And again, about half of the resource, 60% is already in the indicated categories, so quite good at this level. It has only been drilled down to 400-meter depths. So again, when you compare that to Fenelon, where we already have the reserves down to a kilometer, you can see that there's a lot of chemical potential to keep expanding. There's these shoots do continue at depth, so we could continue stepping out on it at depths and continue building them. Martiniere also has a quite large footprint, about a 2 by 2 kilometer area. As Brian was saying, most of the Fenelon resource fits into a 1 by 1 by 1 kilometer cube. So at Martiniere, it's a large footprint, large gold system. So it requires a lot more drilling. It's hard to tell exactly how big it's going to be, of course, but all the indications are that it's a large gold system, and it should be more than the 1.3 million ounces that are there right now. So you think it could be built into a very meaningful deposit.
Is the current drill budget for 2024 Martiniere of a magnitude that might support 25% bigger resource there, or could you might hope for 50 or 100% more with success?
Brian, I'm not sure that we're still in the budgeting process, so I'm not sure you can answer.
So we're still in the budgeting process, and our goal is to continue to advance the project. I'm not going to speculate on how successful we're going to be. Our goal is to improve the economics, improve the resources, and stay tuned. Now, one thing I didn't say, John, is we're fully funded for next year. We're scheduling to close the year with about $27 million in the bank. So, all of our plans for next year are fully funded. So there's no need to raise any additional equity to fund 2024.
And that's Canadian 27 million.
That is correct.
There's a question about the Ripley zone, which was delineated in the updated resource. How much of a focus of drilling will that be in the coming year? And how open is it, et cetera?
Yeah, so the Ripley was a fairly new discovery in the last couple of years. I think in this resource estimate, it's just under 100,000 ounces. It's not included in the PEA. It's a bit too far away from that. It's still open at depths in different directions. It's a bit lower grade than the rest of the Fenelon deposits. That's why we haven't really focused on it too much this year. And I think also next year we will probably have more even higher quality target. And again, it all comes down to economics. You're trying to find zones that are closer to surface and higher grade than the current resource. The Ripley falls a little bit short on that, but there's definitely good geologic potential to find more and hopefully we'll some higher grade. So I'm sure we will be back there again.
So among your different targets of zones to expand, which are the higher grade zones, Attila?
Yeah, so at Fenelon, there's still Tabasco type higher grade material to find. Even last year, still in the same resource footprint, we're able to find new shoots, new higher grade lenses. So yeah, Tabasco, there's a whole more potential to add there. And also in some of the near surface area 51 zones, some really nice high grade zones that are open and again, even incremental increases in those. So if you add 20,000 ounces, 50,000 ounces, those could be really, really good for the economics. So that's kind of at Fenelon, and then at Martiniere, there's not a really big difference between the grade of the zones. So we'll add all of them where we see good potential.
The PEA had 2.6 million ounces recovered at 96%, and probably only had about not even 100,000 ounces that wasn't recovered. So there's almost 1.5 million ounces at Fenelon and over 1 million ounces at Martiniere that didn't go into the PEA. When you do the next economic study, should we expect that most of those ounces are incorporated, plus the new ounces that you're finding with the ongoing drilling?
Well,
So
first of all, the PEA was not done on Martiniere. So none of the Martiniere ounces are in the PEA. And then regarding, the Fenelon PEA and the Fenelon ounces, I think Francois can answer your question of why the difference.
It is one of the main reasons is that the thickness of the resource was at minimum mining thickness was at 2 meters for the resource. In the PEA, as we focus on a large scale operation, so we're at 1 meter large stope with dilution in 5 meters.
4 meters?
We lost ounces there due to the difference of a grade.
So it's 5 meter minimal width also, or
It's 4 meter, but with dilution we went to 5 meter PEA, and mining width in the resource, minimum mining width was 2 meters. So we lost a good chunk of resource from resource to PEA with that. Over that, there was other stuff also, like replay zone. It's an example that resource don't go in the PEA, that lost of resource there. We have also the mining in Camry at 95%, where we have a loss, and also resource at depth and so on. So there is many places where we are losing resource. Overall, we start at 66% of our resource at Fenelon from the resource to the PEA, which is good. We hope to increase that in the future.
Once again, there's questions to be submitted through the question box. I think I asked all of them, Brian, even the ones that were sarcastic. Maybe I shouldn't have.
That's fine. We need
Thank
to
you. Thank you for your presentation and explanation. And, sometimes it's just a bear market and we have to weed it out and grit our teeth. And there's I have a friend whose stock went down 96%, and he owned 9% of the company and bought most of it on the open market. And I'm so pleased that he stayed sane. So it's tough, and I commend you for laboring on. Thank you for your efforts for the shareholders.
Thank you very much, and all the best of the season to you and everybody on the line.
Happy holidays. Thank you very much.
Okay, bye for now.
you know, everyone.
Thank you.